Welcome to Under the Hood, your fortnightly insight and recap into accounting's leading topics and practical insights. Brought to you by AccountantsDaily.
Hello and welcome back to another episode of Under the Hood, brought to you by AccountantsDaily. Happy Tuesday, everybody. I hope you've all been well. My name is Emma.Partis, and this episode we're going to be digging into Australia's tax residency rules and to clarify some common issues that returning expats may have with respect to their Australian tax liabilities. Now, today I'm joined in the studio by Craig Robinson, a partner in KPMG Australia in Workforce and Innovation, and he's going to be helping us break down some of these common tax issues that expats are facing. Craig, welcome to the podcast. How are you doing?
I'm great. Thanks for having us.
Awesome. Of course. Yeah, it's really great to have you on. And I think it'd be really interesting to get into some of these, current issues people are facing with their tax affairs, especially with the geopolitical instability we're seeing. But yeah, I guess for the listeners, today we'll be talking about some of the common tax residency misconceptions and hear a little bit about how Craig has been supporting some clients as they deal with a little bit of, uncertainty with the tax affairs. But before we get into it, Craig, could you give us a little bit of an insight into who you are, your career, and how you got to where you are today?
Sure. So I grew up in the UK, as you can probably tell. So,
no way.
A little village in Essex. So I have travelled and been an expat myself. So I previously was on secondment to a prior employer in Australia. So that 2-year secondment turned into 3 years. I went back to the UK for a few years and ended up yo-yoing back to here. I've lived in Australia for the last 8 years and have worked for KPMG that whole time. Frankly, I fell into global mobility tax, but it has been a incredibly varied, interesting area, and we get to work with people all the time, which is always fun. So, and as you say, there's a lot going on in the geopolitical landscape right now, and that is certainly a big driver of what we need to take into account to support clients, which means it's always changing. You've always got to be adapting.
Yeah, 100%. Well, I guess, it's being an expat yourself once, probably, great to have those perspectives and guiding other expats through their tax affairs. Now, the other week I read an AFR article, which you were quoted, which was sort of talking about people who had been displaced by the Middle East conflict and were returning to Australia, and they were coming back to a little bit of, uncertainty with their tax bills. Can you walk me through some of these, I guess, common issues that returning expats in these situations have been encountering in Australia?
Yeah, so look, it's going to be very varied depending on the individual. And I think that's one of the first challenges with talking about tax residency generally, is it is so dependent on who you are and what your life looks like. The other thing people have to consider is, what did their circumstances look like beforehand? So the way in which somebody who has lived in the Middle East for the last 10 years and now comes to Australia for a short period of time is treated will actually be quite different to somebody that has recently relocated and is unsure about their plans whilst they're in Australia. So particularly for Australian citizens or permanent residents, if they're in Australia, the default position is you're likely to be tax resident unless you satisfy the requirements to be a non-resident. So that's your starting point. And really it's about, what does life actually look like? So if you come back to Australia and you have rented an Airbnb for 3 weeks whilst you decide what your sort of longer term future looks like, that's going to be treated very differently to somebody who retained their family home here, has got the tenants out of that, and they have reoccupied their home. So you do need to understand what is going on in people's lives, and it can be really varied. So I think it's the biggest thing we see is people not knowing how they're going to be treated in the future. And having those discussions up front means that at least people know what they're dealing with, or they can manage their circumstances so that they either maintain being a non-resident of Australia, or they at least understand why they're becoming an Australian resident.
100%. Yeah, it sounds very complicated. Like that might be a little bit subjective or depending on like your very individual circumstances. You've previously mentioned that there are sort of 4 key tests that the ATO considers when assessing, Australian tax residency. I guess, could you walk me through those 4 tests and I guess what they mean for taxpayers?
Yeah, so I'll deal with the rare 4th one first.
Okay,
just 'cause it doesn't
get that one out of the way.
Doesn't tend to be well known, but it is well known for those that are impacted by it. So for individuals that are in basically government service and are a contributing member to, for example, the Commonwealth Superannuation Fund, they will remain a resident. So the reason that doesn't tend to be a hot topic particularly is because they're people that are already in government service. They know they're going to go and work overseas for a defined period of time. So they're not really expecting to break Australian tax residency. And as a contributing member to the fund, they don't break Australian tax residency. The broader test, and as you said, it is subjective, is actually the ordinary concepts piece. So that is really where the ATO will look at somebody's full facts and circumstances and consider things like, what does their life look like? Do they appear to be living, residing in Australia long term? So that can be a broad spectrum of considerations, from where do they live, what's their housing situation, through to do they have the gym membership, where is their job based?
Do they look at that? Like, do they look at a gym membership?
It can be as broad and as wide as that.
Wow.
So if I look at how clients have responded to prior inquiries from the ATO, a lot of that is about what can you do to show that either you were or were not intending to be here. It always goes through to, your Netflix subscription. Where did you say your home was, right? Do they
actually look at that? What if you use a VPN? They'll be like...
who knows? But I think the registered account and just showing the things that you can show as to whether you are really living in Australia or really living somewhere else.
So it's quite holistic.
So it can be holistic. It can be sort of looking at anything that helps you either document and evidence that position. And likewise, if your facts and circumstances don't line up with trying to take a non-resident position in Australia, that's the kind of stuff that might be used by the ATO to build the argument that says you're resident. So it really is quite broad. And one of the things I'll come on to is actually the 183-day test, because that's probably the most commonly misunderstood element of the test. So the interaction between those two is, yes, there is a default position that if you're in Australia for more than 183 days in a tax year, starting point is you're going to be resident here. The most common misunderstanding I see with a lot of clients is the expectation that if you're below 183 days, and you do see people ask that question, I've kept it to 181 just to be safe. It's not how it works. So you can't artificially keep to that number of days and not be a resident purely by virtue of that. So if you trip any of the tests, you would be considered a resident of Australia.
So it just takes one of them.
So it takes one of them. Satisfying one of the tests means that you are an Australian resident. So if you are here for 180 days, but actually your home's here, your job's here, your dog's here, the family's here, you're going to be a resident irrespective of keeping to 180 days.
Wow. And you mentioned, was there a 4th test?
There is a 4th test. So the 4th test is that default presumption for permanent residents and citizens that effectively you are considered to be a resident in the first instance, unless you demonstrate you have what is referred to as a permanent place of abode overseas. And permanent doesn't mean you go and you can't ever come back, because otherwise that would cause a lot of problems for us. But the typical rule of thumb is effectively establishing a home overseas and giving up your home here, coupled with an expectation that you're going to be in that overseas location for at least 2 years.
Interesting. How does that play into someone who may not have like a set address, say like a digital nomad who's like living in hostels, for example?
Yep. So that's one of the reasons that people working on a sort of digital nomad or temporary basis don't tend to break Australian residence if they're already an Australian permanent resident or citizen. So you do see that quite a lot where people are going to third-party locations. Maybe they've gone to Bali. That sort of seems to be quite a popular
they
option.
love Bali. That's in South America as well. They're kind of everywhere.
Yeah. So look, you do see that a lot, and the reality is it's pretty challenging for somebody who is an Australian citizen to break residence on that basis, and even individuals where you look at their sort of broader life and they appear to break residence, but if they are going to a location where they're not going to establish their own accommodation, either their employer's paying for it or they're going to stay in serviced apartments because they're expecting to travel extensively, that can sometimes cause an issue with individuals that would otherwise expect to break residency of Australia.
Wow, definitely sounds like a very, very complicated area. I want to get into some maybe like hypotheticals, given the current, obviously there's a lot of geopolitical instability right now. A few people have been displaced from the Middle East, for example. Person in that situation who might have come back to Australia and they're not sure how long they'll stay in Australia, what are some key considerations, especially is under that more holistic second rule, that might make them Australian tax resident or not an Australian tax resident? Like, where does that line kind of sit for those people?
Yeah. So one of the things people need to consider is where they've actually come from. So if we were talking about a country that you've got a double tax agreement with, which obviously we don't for the majority of the Middle Eastern locations, and that is a more significant challenge because what's at stake is more significant. If it was a location that we did have a double tax agreement with, you've got a bit of a safeguard that there are residency tiebreaker tests between the two locations, and probably your worst case scenario is you're going to get some sort of credit anyway. So the real kind of liability that people are concerned about is the differential between what they have become used to paying in extremely low or no tax jurisdictions and obviously the relatively high marginal rates that you get in Australia. So the number one thing would be for people to look at what they're actually intending to do and be realistic from the outset about whether this is really temporary. If it's really temporary, then it's about making sure that you don't do anything that sort of contraindicates that. So like I was saying earlier, if you are genuinely here for a couple of months because you are concerned about the building you physically live in the UAE or whatever it may be, what are you actually doing? Are you staying in an Airbnb for 2 months? Or actually have you gone and leased a new home in Australia, which would indicate that you're going to be here for at least 6 months? So if you are unsure, it's about understanding what things will trigger that. And for individuals that think they might become resident in Australia again, it's about getting upfront advice to understand what impact that has on them financially, because that is potentially the biggest risk, that there are people that have come back to Australia for very understandable concerns, and everyone acts differently when there's pressure or fear and insecurity. But taking that step back now to understand your circumstances and what that might mean for you financially, so that if there is a bill coming, it's not unexpected. Right.
And I'm quite interested because it does sound, quite individualized, but is there a sort of threshold that you'd hit in certain terms of becoming liable for Australian tax? Like say you just rent, if you lease a property, is that enough to tip you into that category, or will it take a few different pieces of evidence normally?
It can be lots of different things. Certainly leasing a property for any long-term period would be an indicator that you're expecting to reside here. So that would be something that starts to look like residence under the ordinary residence concepts test. It does depend on everything that's going on. So if as part of that you were also having discussions around localising or switching to the Australian branch of your prior employment, those sorts of things start to indicate that you might have become an Australian resident again.
Interesting. And I recall there was some sort of amnesty on this during COVID because obviously there was a lot of, change and instability then. Is there ever any sort of like special considerations for when there is conflict or uncertainty where someone might be living overseas?
There has always been some consideration of extenuating circumstances. COVID was quite an anomaly in terms of the proactive guidance that the ATO put out, which really looked at trying to ensure that people weren't adversely impacted where there was genuinely no fault on the part of the individual. COVID was a little bit different in that we had potentially people that were non-nationals who might be stranded here because of the logistics of actually leaving the country and the border restrictions, as well as Australians that were potentially stranded overseas. When we look at the COVID guidance, the ATO put quite a lot of weight on what people's intentions and personal circumstances were. So individuals that were trying to leave Australia but were thwarted because flights were cancelled or there were health restrictions on going back into their home country, that would typically have satisfied that temporary guidance under COVID. If we look at this kind of scenario, I think it's unlikely the ATO will be as generous in how they view these scenarios because there is an active choice here. It might be very well warranted and driven by concerns of personal security and everything else, but there is an active choice here that individuals who have left Australia, set up life in another country, are choosing to come back to Australia because it is security, because it is their original home. So I don't think we're going to see the same level of kind of concessions and the way that is interpreted.
Right. And this might be a little bit of a simple question, but in terms of, say I'm an individual who's been working, say in Qatar, do they have a 0% tax rate there? I'm not sure. Or like a country with like a very low tax rate. I'm earning income there and I come back to Australia. Would it, like, say I was caught by Australian tax residency, would that mean my income that I made in Qatar is taxed under Australian rates?
So typically in that scenario, it will start to be subject to Australian tax from the date that you resume residency.
Right.
So assuming that you were a non-resident, you become subject to Australian tax on your employment income on the date that you become resident again. So there's no retrospective or look back. Obviously, there is a risk that the ATO might question your prior period of non-residence, and that's where sort of your whole circumstances becomes relevant. But the big thing for individuals that are coming back to Australia is often exposure on investments or capital assets they might have acquired as a non-resident. So as a non-resident, individuals are effectively only subject to Australian tax on their Australian sourced income and gains. So if somebody leaves Australia and they've got a rental property here, they're going to continue to have an obligation to report that income. They can claim expenses, but if there's a profit, it continues to be taxable in Australia. The same applies elsewhere, but when you return as a resident, the issue you've got is suddenly your global income and gains are subject to the Australian tax net. So things like understanding the value of your foreign share withholding when you become a resident again can be really important. So it's really about that sort of understanding of what individuals have to really know how to help them understand what the potential exposure in coming back to Australia might be.
Very, very interesting. I guess, there's a lot of modern working structures right now. People like work cross-border a lot, but like say someone's, kept their job in the Middle East and they've relocated to Australia and they're, working remotely in their job. Are they still like possibly subject to these tax residency tests?
Yeah, so residence is entirely independent of sort of your paper contract. I think
Right.
if it wasn't, we'd have an awful lot of people with Dubai employment contracts living in Australia.
Yeah.
So,
I feel like there's a lot of like companies with not a lot of activity over there.
yeah. So look, it's always a substance over form consideration when it comes to tax residency. So, in the same way as that doesn't get you out of it, if somebody's got a foreign employment but they are spending time in Australia, particularly if they're becoming a resident in Australia, that can actually create obligations for their foreign employer. And that might be at a corporate level by creating a permanent establishment of the foreign entity in Australia, which can be the real big sort of structural concern for the employers.
Is that as simple as someone working out of their home in Australia, like for a foreign company?
It could be.
Wow.
It sort of looks at that consideration is like the fixed place of business element. So it could be as little as that. Obviously, the greater exposure is when somebody actually starts to represent their organisation here. So if they went to, if they booked a WeWork space or something like that and started to operate out of that, that's likely to be viewed as a greater risk of having created a permanent establishment. But even without sort of that fixed place of business, you could still create it through your actions. So if you're a senior executive, for example, and you have the ability to conclude contracts or make offers on behalf of your home business, that would all increase that sort of corporate and structure level risk. The other thing is, even if you don't get to that point, the presence of somebody working in Australia could create employer obligations for their overseas employer.
So what sort of tax are we talking? Is that like payroll tax, company tax, like all sorts of that?
So company tax follows the structure. So that would be about if there's a permanent establishment created typically. The issue that you tend to see is actually that if the individual is taxable in Australia as a result of their physical presence here and there's no PAYG withholding, or the most sort of common one that comes up because of the way that superannuation legislation is separate to tax legislation, is that there is a superannuation obligation on a foreign employer, which just practically and administratively is really, really hard to manage. So you think about all the things that a foreign employer wouldn't be comfortable doing. They haven't got an Australian bank account. They haven't got a relationship with the default Australian superannuation fund. So managing that kind of exposure can be really challenging for foreign employers.
Is that a common thing across like a lot of jurisdictions, or is Australia particularly complex, would you say? Like,
everywhere's got its quirks.
yeah, I bet it's such a complicated space to be on top of everything.
So look, Australia is a very high compliance environment. We've also got sort of a federal and state system, which creates some additional overlays.
Payroll tax.
It's always what you're familiar with that you think is the more straightforward bit. But the reality is trying to deal with sort of multi-stream obligations in Australia is really challenging for foreign employers, and particularly if they've never had presence here. They don't have any sort of local administration support or anything to help manage those obligations. That's where it can be really challenging, and actually the cost of trying to do the right thing by the individuals and be compliant can be really significant, even compared to the actual liability or the number of people they've got physically here.
Would you say it's like quite a common issue that you see?
Look, it's the world I work in, so
yeah,
I probably
true.
I see a disproportionate number of it, but it's quite a mainstream issue, really. So if we look at the way the world of work has changed over particularly the last 10 years, it looks very different now to what we used to experience as the default. So, normally source of income was very obvious. You physically lived in London, your job was in London, you performed 99% of your services in London, you had very occasional business trips. That was probably pretty straightforward. As well as sort of the remote working consideration that has definitely added complexity for employers. You've also got a lot more people with regional roles. So individuals that might have a obligation or some element of compliance obligations in multiple jurisdictions by virtue of having a global or regional role that requires far more business travel than they used to. It is also just inherently easier for people to go and earn money through non-traditional income streams. You know, you see influencers everywhere and how are they sourcing their income, I think is going to be a very interesting area in the next couple of years. But also just the ability for people to choose to go and do their job, their business from other locations really does create a lot of additional complexity for employers that are trying to do the right thing, that are trying to be compliant in their locations. And one of the things that has been quite sort of high profile is where individuals have worked remotely from in other locations where they don't actually have the right immigration clearances to do so. There was the reason I sort of gravitated to Bali earlier was there was quite a recent case there where somebody was running effectively an online social media presence business from there. They were then prosecuted for not having work rights or the rights to earn income in that location. They were there on a tourist visa.
Wow.
So there is some real risk to individuals in not understanding their obligations.
So were they were sort of doing influencer work? Were they like a travel vlogger or something?
They were doing travel vlogging. They were reviewing youth hostels and restaurants and beaches and this sort of thing.
What a job, first of all.
Yeah, look, I'd love to know how they make that viable, but that's clearly not my area of specialism. So, but that's the reality of it. You know, if you think about that from a detection risk perspective, they're advertising that they're doing some form of work or income generating behaviour in that location. It's very easy for the authorities to check that sort of thing.
Wow. Yeah.
The other thing that also comes up is just individuals when they're traveling between locations, somebody with the best will in the world turning up and saying, I'm going to remote work for my business from this location for 3 months whilst learning Italian. If you haven't got a visa that permits you to undertake work, and there is digital nomad visas for that intended purpose in a lot of locations now, but if you don't have the right visa, you really could be detained at the border or returned to your home country as a result.
Wow, that is so. I didn't even think of the influencer piece because you obviously see all these travel influencers popping up. Would you say, I'm not sure if you would have much visibility over this, but like, what do you think the level of awareness is amongst sort of like travel influencers or people who like work as digital nomads of these like tax liabilities that could trap them like in a foreign, jurisdiction?
Not strong would probably be my best guess.
That is fair enough.
I certainly don't see a lot of it in our business. So I think that's the first thing is that I don't know who they're getting advice from.
Probably
which
TikTok.
is probably an indicator that it might be, Dr. Google from a tax perspective. But it isn't well understood, I don't think. There's not sort of a lot of planning around it. And the other consideration for people earning money in that way as well is they might not be paying their tax bill up front. So income is really volatile in that area, which might mean that they've got a liability there where there's no withholding. They're possibly not going to be hit by it for 18 months. There's a very real risk that they've spent it in the interim. But it's really that sort of flip side of, we're all used to filling in our departure cards when we land here. And actually that's asking you all the same sort of questions that you might get in any other jurisdiction. Why are you here? How long are you intending to be here? Are you working here? So people do need to be aware of what their risks might be if they're looking at working in other jurisdictions. It tends to be a little bit simpler if you're going back to somewhere you've got citizenship. But that, again, you've got to be sort of quite self-informed as to what you can and can't do.
Interesting. And I guess because it's such like a new area, I guess, of work, in your view, how do you think, I guess, tax jurisdictions globally are adapting to this? Is it sort of like early stages of dealing with this kind of work?
Yeah, look, I mean, the last 10 years has been hard to keep up with across, all areas. So I think that there's some real challenges for the authorities, and the realities of changing legislation just isn't going to happen as fast as real life. But if we look at what happens in Australia, for example, the Department of Home Affairs do share travel data. So that sort of piece around knowing what your responsibilities are. If I go back to what do we see when we do see residency questioned, the question is always in there as to how much time you've spent in Australia. Now, the ATO probably have that answer already.
They're just like testing you.
But they are. They're looking at what your records are like. Are they accurate? Is your response truthful first time? And look, there is a lot more data sharing that's going on. It's quite prevalent in the EU as well. So you've got inter-country and inter-authority data sharing. So there's quite a few sort of factors that mean that there are levers, there are measures that governments and competent authorities can use to track and inquire about compliance. I think what all organisations are still struggling to keep up with is the volume of information they need to manage. So COVID was really kind of that pressure point of an awful lot of organisations. Their first question was, we don't actually know where all of our people are. So you might have people tracked through a business travel system, but have people gone rogue and booked business travel outside the official system? Are people, doing work from a country of their nationality that hasn't been formally approved or logged in your HRIS management system? So that's the sort of logistical challenges that all organisations are dealing with.
Wow, huge. Yeah, it does sound like a really rapidly evolving space. And I don't want to rail too much about influencers, but I think it's such an interesting topic. Like, it's like something I never would have thought of previously. But say like an influencer was coming to Australia to like film their travel vlogs, et cetera, et cetera. What advice would you give to them in terms of making sure they're not getting into trouble with the ATO?
Well, I think the first thing is really understanding what they're doing and how they're earning their money. So, depending on who they are, some influencers might actually fall under the entertainers provisions, which means that actually, even if they're from a country that we have a double tax agreement with, the default position is they're taxable in Australia on anything they earn in Australia. So that's similar to Miley Cyrus comes to Australia on tour, right? So there is a tax obligation in respect of her performing in Australia, for example. So influencers increasingly are potentially within that bucket where they are viewed as like a presenter, or they are undertaking an economic activity here that means that their earnings are sourced from Australia.
Interesting. Does it really depend on the sort of content they create?
Not necessarily the content. It's probably more about how they earn their money. So if there is advertising revenue that is tangentially kind of linked to them taking photos of tourist hotspots, that maybe is a bit more sort of disconnected. And it would be more sort of thinking about, well, have they come here because they're going to go to an event that is going on in Australia that they're going to go and talk to, and effectively they're sort of building their presence in Australia, and they're using something that is here to directly generate income. But I think the starting point would be, if you're here as an influencer, you're probably here because of there being a draw card in Australia. And if you're earning income as a result of that, you might have an exposure. Now, the entertainers' principles are also complicated by needing to look at the payment mechanism that sits there, because there are a lot of obligations that sit with the payer. And that I'm not going to dive into the structure of influencers, but a lot of them will be working through a corporate entity. So that sort of further complicates how those individuals need to get viewed.
Very interesting. And, there's been a lot of change lately, and without getting into too many specifics about your own clients, but just in general terms, how has your own client base kind of shifted over the past 10 years, would you say?
I think it's just, you've got a lot more complexity in ordinary situations. So I think with less travel historically and much more dependability around how you could plan ahead, things were a little bit more stable. So individuals were able to take sort of more preemptive action over a longer period of time. You got more planning and you've probably got less variables. Whereas if we look at what we're dealing with more recently, you've got no lead time at all. If you've got any kind of warning that you've got an opportunity to pre-plan, you're fortunate at the moment, just because of the pace of change and the way that both organisations and individuals are dealing with that. But also just the number of variables. People are considering things that wouldn't have been what they expected even, as I say, 10 years ago. So historically, if an employer asked you to go to Dubai to go and undertake a 3-year secondment, that might well have been it. What we're seeing far more is people looking to engineer hybrid arrangements. Employees are far more comfortable negotiating a position with employers is one of the things I think I've observed over that period of time. And actually people have got, still in my view, got some travel reluctance post-COVID. So there is a lot more desire to both travel but also understand how you get back home when you want to.
Maybe people are a bit more mindful of that these days.
Yeah, a little bit more risk averse. I think we partner with a number of organisations when we look at things like business travel reporting. One of the consistent themes we've seen from their surveys, for example, are increasing concern about both certain locations, but also actually just travel in general. So I think it's not been quite elastic in terms of people's level of concern going back to pre-COVID levels. People are much more mindful of what happens if I get sick, what happens if there is travel disruption, what are the kind of contingency plannings. And that's really where that number of variables I was talking about becomes much more complicated, because it has become far more normal to look at things and say, well, what is your fallback plan? What third-party location would you then look at considering? So there's a lot going on.
It's a lot of, I guess, admin for someone looking to take a trip or, work overseas these days. You mentioned a little bit about tax residency frameworks globally, but I wanted to ask, in your view, how is Australia's legislation or frameworks kept up with all of these changing workplace trends?
So there hasn't been a lot of change in the way that the Australian tax residency rules are viewed for decades. So the most recent or the most relevant ruling across the 4 tests was a tax ruling from early in 2023. And that didn't examine the Commonwealth superannuation test, because that was a bit of a non-issue, but it did comment on the other 3 tests. And that there was some clarification, there was some more up-to-date commentary as a result of that ruling, but it didn't fundamentally change really the application of the other 3 tests. It was more of a reinforcement that at that point the ATO's view was that you still need to look at an individual's whole facts and circumstances. Now, if you contrast that with what we thought we would be dealing with There were a number of papers and sort of expressions of commentary on a consultation in 2019, which was looking at whether or not Australia would adopt a statutory residency test. If we look at what happened in the UK, and look, Australia and the UK do have quite similar tax systems. There's probably a reason that there's a number of us that have worked in both locations. The UK did introduce a statutory residency test, and that was much more prescriptive around factors that would result in you either being resident or demonstrating that you were not a resident. So it's far more objective rather than subjective in terms of how it applies, and it would literally, the way it operates is if you have a UK employment contract and access to a property and you've spent more than 45 days, you are by default a UK tax resident. And there's a lot of discussion around doing that here, which has really completely subsided since the ruling in 23. There doesn't seem to be any real appetite around revisiting that at the moment, and I do think priorities are elsewhere. If we look at what sort of changes are being telegraphed ahead of the budget, etc., I don't think we'll see anything in terms of tax residence there.
Do you think we should?
It's a good question. I don't think there is a right or wrong answer to what the UK have done. I do think it provides more certainty and more clarity for people looking to plan their circumstances, but it has also created a bit of confusion. The reason I picked up that 45 days is because I still get clients come to me and say, I've been coming back to Australia for, I've visited family or I've holidayed here, but I've stayed below 45 days, so none of that matters anyway, right? And the reality is there is no 45-day test here, but because that was mooted in the consultation as being one of the thresholds, that is still causing some confusion.
Right, so people still think that's like part of the legislation.
I think it's more just it was widely discussed at the time that was the direction things were heading in. Whereas actually the decision to kind of not pursue that and then to issue the ruling in 23 that really reiterated past residency treatment was much quieter. So people still have some expectations around there being a statutory residency test here, which hasn't actually ever come to bear.
Sounds very, very complicated. Say I was someone who was a little bit uncertain about my tax residency status. What, online resources would you direct me to get started in sort of understanding my situation better?
There's a couple of things. So the ATO do have some good publicly available guidance. So they provide a number of case studies, for example, around individuals in a various range of scenarios and whether or not they are likely to be considered a resident or a non-resident. So I think that's a good starting point. I would also say KPMG have some free online resources.
Really good advice, guys.
Little plug. But look, so there are some free resources. The one thing I would be very cautious of are we see some organisations blending financial advice with tax advice, and that is where there is some concern. So I often see sort of things advertised or commented on around how to avoid Australian tax residency or how to avoid a liability on the Australian home.
Ask ChatGPT.
And look, again, the usual warnings around AI remain. You might get the right answer there, but equally well, that's not consistent. But things where the reality is residency is based on what you're actually doing. So anyone that's telling you this is how you avoid tax residency is probably mis-selling their advice in terms of what you're gonna receive in that scenario. So I would just say it's about what you're actually doing. It's about your real facts and circumstances. It's about what you intend to do. And the reality is that the worst thing in the world? So, you know...
you have to pay tax. No.
You do have to pay tax, but also what for some people, what is your alternative? Like, you know, people that are coming here because they've decided that's the safer location, they want to come back to Australia. You're an Australian resident, you pay your fair share of tax, and you're part of the economy and the nation and the system. And, you know, it's there is a reason that structure is in place.
100%. Big agree on that point. But before we wrap up, I guess if you could say one thing to someone who might be listening to this podcast who's a little bit uncertain about their residency status, maybe they're, you know, facing a bit of that instability, maybe they're an influencer, what was like one key takeaway you'd want them to be aware of in terms of their tax liabilities?
So the first thing is being realistic early. If in actual fact you're going to base yourself here for a significant period of time, get advice. Just understand what your potential exposure is and account for it up front, because that's really the sort of risk, right? That you've accrued a tax bill that you haven't got any cash to pay by the time it hits. And document what you're doing. So one of the hardest things is that often this stuff comes up years later. And being able to look back at your records and know where you were or what you were doing, what your circumstances were, is so much easier than trying to reconstruct that in retrospect. So it's really boring, but do the basic admin, maintain your travel calendar, keep receipts, and understand what your sort of what are the potential things you might need to evidence.
100%. Well, Craig, thank you so much for joining me on Under the Hood today. It's been an absolute pleasure having you.
Likewise.
And for the listeners, if you would like to get in contact with me, you can reach me at emma.partis at momentummedia.com.au. Until next time, bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.